Hello and welcome to my channel. I plan to record my journey towards financial independence and retire early in this channel. Currently, I mainly focus on sharing my Canadian dividend stock investment journey and those stocks in my portfolio. This is the way that let money works for you and generate more money. In the future, I will also add contents introducing products that saves you money. So if you are interested in these topics, hit the like button to let me know. Subscribe to my channel and turn on the notification to get the latest update. And now, let's get started. Do you want to invest in real estate? But you are afraid that you don't have hundreds of thousands of dollars at hand for down payment? Do you want to collect monthly income? But you don't want to deal with tenant issues? Then you can look into REITs, Real Estate Investment Trust, which allows you to get involved into the real estate field without actually buying entire buildings. Instead of paying a huge number of money to buy an entire real estate, you can buy REITs like stocks so that you own a small portion of the real estate. Unlike physical real estate that you will hold them for years once you buy them, REITs are more liquid, meaning that you can sell them whenever you want, just like selling a stock. Compared to buying a single house, REITs can be quite diversified. You can invest in REITs that focus on medical buildings, office buildings, retail buildings, residential buildings, and so much more. And the REITs needs to pay a minimum of 90% of their taxable income in the form of shareholder dividends each year. That's why most REITs offer high and juicy dividends. And they offer it monthly. Now, let's look at today's REIT, RioCan, which is the second largest REIT in Canada, owning 289 primarily retail properties with a net leasable area of 44 million square feet. RioCan major focus on Canadian markets, and more than 50% of their assets are in the Greater Toronto Area. On average, more than 200,000 people live within 5 kilometers of RioCan centers. And in the future, the incoming immigrants are also the targets of RioCan. Currently, retails have been the largest portion in RioCan's portfolio, and it takes up over 90%. Around 79% of the tenants are providing them stable income. And look at these big names in RioCan's tenants: Loblaws, Costco, LCBO, Canadian Tires, TJX, and Dollarama. They all pay rents to RioCan, and RioCan are increasing their exposure to these brands. And if you buy RioCan's stock, you are owning a small portion of those properties. Next time, when you visit those stores, you know that you own part of it, and those brands are paying a portion of their rents to you. RioCan is also moving towards mixed-use buildings and having more residential buildings. We can see more than 70% will be located in the GTA, where a large portion of the incoming immigrants will find home here. As we know, Canada is welcoming more immigrants to come. The future of RioCan will be bright. When we buy a house, we care about the locations. So does the buildings owned by the REITs. We can see here, RioCan's completed, under construction, and future planned buildings are all near public transportations. That's quite important and attractive for home buyers or potential tenants. One project currently undergoing by them in Toronto is called The Weil, which is a mixed-use property for retail, office, and residential. Guess what? I live in Toronto, and when I walked down towards Spadina Avenue weeks ago, this nice and huge building attracted me. And then I realized this is The Weil by RioCan. It's really nice to actually see these buildings being there near you, and this makes me feel better when buying and holding RioCan stocks. Now let's look at the stock. The current price is $20.2 per share, which is still lower than the last year's March market crash, meaning that there is still capital appreciations of this stock in the future. The current dividend yield is 4.74%, and you will get $0.69 per share per year as a dividend, meaning that if you invested in $1,000 in RioCan, you will get $48 per year and that's $4 per month. The company has actually cut their dividend 33% down from $1.44 per share last year to $0.96 per share this year. I would not say this is a bad thing, because this can help the company to go through the pandemic and have enough money for future development. And I believe when the pandemic passed by, and the company will recover, and we will see the dividend goes back up. Also, the current price is far below the fire price, which is around $34, meaning that there is still space for the growth of the stock price. By having a good dividend yield as well as a potential growth in price, I think it's a good chance to buy RioCan while it is around $20 or under $20 per share. Currently, I hold 20 shares of RioCan in my portfolio, and their total value is around $400. My average buying price is around 19.71 Canadian dollars. RioCan takes up around 4.76% in my entire portfolio, and so far my all-time return is 2.5% up. What do you think about RioCan? Do you already hold it? Will you buy it? Leave a comment and let me know. Thanks for watching my video. If you like it, hit the like button to let me know. If you are looking for a zero commission fee platform to invest stocks, I recommend you Wealthsimple Trade. If you are looking for high interest saving account, Wealthsimple Cash offers 0.77% interest and EQ Bank offers you 1.25% interest, which are all higher than the big banks. Check out my referral links in the description to get a referral bonus when opening these accounts. Thanks again for watching my video, and I'll see you in my next video.